Hi, welcome back to Market Focus. Now you might have heard that last Friday shares of ride-hailing company Lyft debuted and began trading on the market last Friday. We had a lot of clients contact us before the IPO asking our opinion on buying the stock when it began trading. Now let me explain how IPOs work so you have a good understanding of the way that this dynamic plays out, because we advise our clients to be very cautious in most situations. Lyft priced the shares at $72, and so what that means is that those firms, the brokerage firms participating in what we call the underwriting syndicate, could distribute the shares of stock to their biggest customers at that price. But public trading began the next day at $87 a share, and that was the earliest opportunity for public investors to buy the stock. This morning, the next trading day, the shares of Lyft are now at around $70, 20% less than they were when they began trading last Friday. This is typical, guys. It's very common for companies' shares to drop below the IPO price, and in fact be below that price even 6 months later after the IPO. The investors that makes the most money on these stocks are those that were early investors before the trading began. And that would include venture capital funds, insiders of the companies, but there are actual ways for public investors to be investors in stocks like this way before the public offering, including some of our clients. If you want to learn more about that, we'd be happy to tell you. But it's very important that you approach IPOs like this cautiously. They're not for the faint of heart, and they're not for most investors to begin investing in them right after trading begins. Think about it. It's those investors that were in early that want to get out and cash in and lock in those gains. Over the next several months, we expect to see a lot of big name IPOs from companies like Uber and Pinterest expected to come out over the next several weeks. There's a lot of companies that you're going to hear about going public because they want to have an opportunity to cash in and capitalize on their values before the next recession happens. 2019 is expected to be one of the biggest years of initial public offerings in history. But I want to advise you, just be cautious and go into it with eyes wide open. Thanks for listening, and stay tuned for more insights.